Mr. Vijai Mantri, sir, you are literally, one of the person who's been at the foundation of the mutual fund industry. So thank you so much for coming here. My first question to you, sir, is who should get a financial advisor? Is there like a stage in life after which I should be like, I need a financial advisor?
So first of all, it's real pleasure and honor to be with you, because I believe you are one of the most leading influencer or a person who's dealing with personal finance, and your team has done a fantastic job of educating millions of investors. So my experiences could be a liability, but dealing with people like you, we learn lots of things. So the question is, who would need advice? Is as simple as that. Who would need good health advice? Athlete would need, a obese person would need. Depend on your situation. Everybody need a good advice. And I can tell you, for my 30 years of experience, I dealt with somebody who's earning 5,000 rupees, and I dealt with somebody who's 5,000 crore of AUM. Ultimately, the person who take a decision is a human being, and everybody made a mistake in their life. There's no single person I have met in the investing journey who's not made mistake. So if you are really smart, you learn from other people's mistake. Or if you're really smart, then you make mistake. If you're not smart, you make mistake and, again, keep repeating. But once you're really smart, then you figure out you made a mistake, what are the lessons I learned, and do I need to take help of somebody to manage my money? And also need to understand that all of us have a limited cognitive abilities. So whether I look at enhancing my career, whether I need to look at taking care of my health or our family, I can't do everything. There are certain set of people who are extraordinarily brilliant, but they can't be brilliant at all the things in life. So wherever you see that you are not good enough, for whatever reason, there's no shame in taking help of expert, whether it's medical, health, career, whatever. We do take help. So that is my submission, that perhaps everybody would need a little bit of help in managing money.
So after working in this industry for more than 30 years, you've seen all kinds of investors, you've seen all kinds of mistakes that people are making. So can you sort of share what are the biggest mistakes that you're seeing that young investors are making today?
Not only young, actually everybody. Yesterday, 2 days back, I was with the 80-year-old person. Okay, he's seen everything. And same thing, Mantri ji, gold mein dalna chahiye, silver mein dalna chahiye. So a recency bias. So right. People chase across the globe. I have dealt with investors in New York and Nasik, Tokyo and Tarapur. It is same question. People chase immediate past return, and that perhaps is the worst way of investing.
Yes.
And will people keep making the same mistake? People will not change.
Okay.
So exactly as I told you, we know everything. What is needed what needed to be done to stay healthy? Everybody knows the answer. Okay. But ultimately, what will you order in the evening? Samosa and vada pav.
Yeah.
So this.
Right.
So staying this, and it's very funny. Someone told me that making money is very simple. What is required is discipline. But he told me something very profound. He said the part of the brain which is responsible for discipline, the same part of the brain which feel the pain. So staying disciplined feel like we are going through a painful process. And that is the reason people find the easy way out. And our job is to simply ask people to stay disciplined, but we make it a little more meaningful, interesting, conversational with people. So, they stay on the course. So if you ask me what is my edge is behavioral. That anybody comes to me will stay longer. And if you stay longer, you'll make money.
So one is recency bias. What other mistakes do investors make?
And then it's very funny that India is a very funny society where everybody is expert in everything else except their own work. So you go in the morning walk, friends will tell you something, evening mein kuch aapko bol dega, colleague will say something, and we get guided by those people who have no stake in the way money has to be managed.
Yes.
So take reference, but ultimately you need to manage your money through expert help. So this is a challenge I've seen. People listen to too many voices and then end up confusing themselves in the whole process. So these mistakes get repeated. There are many mistakes people make but these are two fundamental mistakes, that quality of advice is not available. And second is that recency bias is huge. So you don't touch asset which is not done well. People are talking about gold today. What happened 3 years back? Nobody is talking about gold. Why? Why people are talking about gold today? Because gold is deliver return. So this is the way the world money is managed. And I don't know whether you've seen this report by JP Morgan. They looked at 20-year data of US market. They looked at every asset category, S&P 500, bond, gold, everything. And then looked at return of investor. By investing all these asset category, returns of the investor was the bottom. Because they kept investing at the top of the market cycle in every asset category, not at the bottom of the market cycle.
Okay.
So I have done a study when I was with HDFC Mutual Fund. It's very funny. The fund's returns and investors' returns are two different things. So I have done a study with HDFC Mutual Fund. One of the fund was delivering some 18-19% CAGR. But the investor in that fund had a single digit return.
Wow.
Yeah.
How is this possible?
So what happened? The fund was 100 crore, delivered 30% CAGR. Fund became 500 crore, delivered 20% CAGR. Fund became 2,000 crore, delivered 20% CAGR. Then 3,000 crore more came and the fund went down 50%, 30%, 40%. So if I look at aggregate return of the investor in that fund.
Wait. Then the fund went down.
Of course, because 2008 crisis came. Market went down 60%.
Right.
So at 100 crore made 30%. 500 crore made, say 20-30%. But 3,000 crore went down. So this is the classical things which keep repeating time and again in the market.
I think this is the right segue to go into how to pick the right mutual funds.
Yes.
Now, there are about 4,000 plus different schemes right in the market today.
Yeah.
So, what is your way of picking the best performing mutual funds? And maybe we can start off with understanding, okay, there are maybe 50 different categories. Out of these 50 different categories, how much do I need?
So I simplify for your viewers, but actual life is not as simple as trying to simplify. So first what I do is that you must have heard from people saying the winners keep rotating. Now, moment I say that, I am taking my investor into uncharted territory. Okay, winners keep rotating. Then what?
Yeah.
What is the solution? Which is going to be the future laggard or which is going to be the future winner? That is the most important thing for me to communicate to the investor. So I looked at fund houses. So out of 45, 48 fund houses, I already picked 20, 25 where I see the team is good, the size is decent. Even somebody leave, they have the ability to hire new fund manager. So I have already chosen 20, 25 fund houses.
So AMCs you've already shortlisted.
Already shortlisted. And then new AMC keep coming, like Abacus has come, Helios come, White Oak come, because I know the fund manager very well. So I know what is their track record. These are not the name people need to go and market. I'm just making a point. So then I look at the scheme of these fund houses and then I say, if winners rotate, then what is a top category right now? Or somebody who's topping the chart right now. After a certain point of time, they will stop outperforming and they will go down. And there's a finite time in which the fund outperform, 3 years, 4 years, 5 years. So I looked at the data of the best performing fund, how long they stay in the top quartile. And then there's a tipping point comes where now the performance start going down. So I looked at the point where we believe that now the fund is topping the chart for a pretty long period of time. Stop giving new allocation to that fund and start looking the fund which has underperformed. Fund from the great fund house, great fund manager, but underperformed for 2 to 3 years. We have a time period we decide on. And then they start giving allocation to that fund. So one of the most popular fund on social media, I'm not taking the name of the fund. We stopped recommending that fund 3 years back. And perhaps there's a time now we'll start recommending that fund again. Because the fund was topping the charts 2 years back. And now the fund is underperformed. And now perhaps we'll pick that fund. So that is the one part. So it is very counterintuitive. Suppose I'm telling you a fund which is delivered 20% CAGR. And the other fund was delivered 12% CAGR. And I'm telling my investor to go for 12% CAGR. What will be his reaction? You may be getting more commission here. Okay, that is a normal mindset. So this is the one part. The second part, then I look at which category I should be recommending. Large cap, flexi, multi, small, or thematic. I'm a big fan of thematic funds. And there what we have done is very simple metrics that India's GDP has grown 12 to 13%, 14% for last 10, 15, 20 years. If a fund category delivers 17, 18% or more than that, then we say that fund has start topping it. That category start topping it. So, for instance, 2020, when I have no clue about IT industry, but we took a call because in 2021, the 10-year return of Indian IT fund was 22 to 25%. We said this is not sustainable. I had no clue what will happen in future, whether AI will come or no clue. Similarly, in year 2000, we looked at PSU equity fund. 10-year return was an absolute negative. We start picking those funds. Pharmaceutical. So we look at where the category average return has been substantially higher than India's nominal GDP growth or substantially higher than the corporate profit growth of India. Then we say this segment has peaked. And we start looking at segment where the last 5-10 year return has been suboptimal, because ultimately winners will keep rotating, the sector will keep rotating. So not necessarily you have to be contrarian for the sake of being contrarian. You just figure out first of all where the profit pool is moving.
What do you mean by that?
Which sector of the economy is going to be more profitable? And
how do we predict that?
Not very difficult actually.
Okay.
You need to do some work and you'll figure out. The most important thing to see where people are spending their money. So let's look at FMCGs. Let's look at, for instance, cement and steel and building material company. It's very fascinating story. India built lots of houses. The first thing you need to build house is cement and steel. But cement and steel company has not delivered return in the last 20 years. Effective. Very less. But building material company like wire company, switches company, plywood company, these company has given 50 to 100 times growth in their market cap. Because what has happened, once you build a house, the number of electric connection you have in house, number of plywood, all kind of material use, the cost of interior has shot up substantially. So consumption is happening in this segment of the market.